Good night, folks, it's Castaway Trader. Welcome back to my YouTube channel. And tonight we are watching as ES-mini topping. The main question for us, what kind of a top the market is about to make? Is it going to be a major top in a large wave A up of the December 2018 top, or a top of the subwave 3 of a 5-wave move up started in December 2018? Before we start, I want to remind you that I have a website www.castawaytrader.com where I post regular updates. And I want you to read that important disclaimer. Finally, join my Facebook group because I post a lot of charts there intraday. Okay, as you know, I practice harmonic Elliott wave theory, and the main fractal is 5-wave fractal. 5-wave fractal is a backbone of any trending move, either up or down. It is subdivided into 5 major waves: 1, 2, 3, 4, and 5. As you can see, waves 1, 3, and 5 are in direction of the main trend, and there are 2 corrective waves, wave 2 and wave 4, which are just temporary pullbacks, and we make higher lows confirming the trend up, while waves 3 and 5 make higher highs confirming the direction of the trend up. As you can see here in red, I added dates when S&P 500 made those specific tops and bottoms to be aligned with that 5-wave up fractal. The fractal started in March 2009, wave 1 topped in May 11, then corrective wave 2 bottom in October 11, then we got A of 3 up, topped in May 15, corrective B down in February 16, and we got the final push up, completing the strongest part of the rally in wave 3, and this is the top we got in September 18. And I believe that quick but deep correction we got into the low of December 2018 was all of corrective wave 4. And of that wave, the bottom of wave 4, we should get the final push up in wave 5, and that wave 5 has to be subdivided into 3 major subwaves: A up, B down, and C up. What do we know about the first leg up in subwave A up? 2 things. First, it is subdivided into 5 smaller subwaves: 1, 2, ABC of 3, 4, and here should be ABC of 5. And the second thing we know that wave A of 5 loves to top somewhere around the top made by the preceding rally in preceding impulsive wave 3 up. It can top right at the same level, or it can go a little bit higher or stop a little bit lower, but almost never it is strong enough to make a sustainable breakout. Even if it makes a new nominal higher high, then it will collapse down again in a corrective wave B. And only in the very final rally in wave C of 5 we're gonna get a sustainable new higher high over the top made in September 2018. Now let's look at S&P 500 weekly chart, started of that low in 2009 up to now. We got ABC of 1, corrective wave 2, A of 3, B of 3, C of 3, and this is ABC down in wave 4 down, which bottomed in December 2018. And as I mentioned, wave A of 5 loves to top somewhere close to the top made by the preceding rally in wave 3 up, and that was here, so we are very close to top. Once we top here, we should see a corrective pullback, and as you can see, I added retracement fibs 50%, 61.8%, and 76.4%, which form that green target box, a potential bottoming area for that upcoming pullback. But before we start talking about the target for that pullback, the most important question for us: has that wave parenthesis A up started in December 2018 has stopped? This is a micro model of that particular move. At this particular point, the structure in S&P 500 argues for the top we are making now, tonight, or maybe tomorrow, would be only wave 3 out of those 5 waves required for that wave A of 5 to complete and to top. Let's look at a micro chart. This is a 2-hour chart of S&P 500, and we are counting waves of the major low made in December 2018. ABC of 1, corrective wave 2, A of 3, B of 3, C of 3. As you can see that wave C of 3 has also been subdivided into 5 waves of smaller degree. This is what makes the harmonic Elliott wave theory a very efficient tool of prediction, because to conclude that a wave has completed, you have to get 5 waves of smaller degree composing that wave. And to conclude that parenthesis wave 3 has stopped, we have to get 5 waves inside of that move. It's 1, 2, ABC of 3, 4, ABC of 3. So I have here a nice stopping area between 2901 until 2926, where I expect that move up to top. And once it tops, so this is again my primary scenario, I call it the bullish scenario, we should get a corrective wave 4 down, which has 3 targets, 2750, 2710, 2670, retesting wave 4, the previous corrective wave 4 of a smaller degree, a typical target for a corrective move of a larger degree in wave 4 down. And of that green box, we still can make another move up to test 3000 in S&P 500, and that could be the real target of that rally that started in December 2018. And once we top here, we would get that corrective leg B down. This is our model, remember, A up, B down, C down, which would complete that huge rally started in 2009. And if we are talking about that small rally we started in December 2018, this is what we are talking about now. So once that rally has stopped, we will get ABC down and a corrective wave parenthesis B down, and only then we would get the final push up, which would complete that bull market which has been lasted for more than 10 years. Now I want to show you another alternative scenario, a slightly different scenario. I call it the bearish scenario. Under that scenario, one may argue that the rally started in December 2018 is about to top right here and now, again between 2926 and 2901, because we may stretch that count and to consider that top as the top of parenthesis wave 3, that was a corrective move in parenthesis wave 4, and that is the final push up, ABC up, in parenthesis wave 5, completing that rally, parenthesis A of parenthesis 5, started here in December 2018. I do not like it that much because I would like to have here wave 4 more pronounced. That's why I like the blue count more, but I could say that it's still valid. Again, when we have two alternative counts, we should wait for the moment when both counts have the same expectation regarding the next move, even though they may have different expectations about the depth of the upcoming corrective move down. But at least we both look down from that red target box, and if it's the bullish count with blue labels, we are talking about a corrective move down into that area. If we are talking about the bearish red count, we still are expecting a drop into that bigger box. It can move down as low as 2609, or it can also stop here at 27,000, or even it could be as shallow as 2750. So basically, if you are a bear, I would be covering my shorts once we hit 2750, 2720, 2710, and I would not be holding the whole position because we don't know. So the high probability part of the move would be up to this place. Then anything could happen. So the bearish count would imply that the top we are going to make this coming week would be the top of that wave A up started in December 2018, and we are going to start a larger pullback in wave parenthesis B down. And so this is how it looks. This is 45-minute chart. This is our topping area. It can stretch a bit higher tomorrow or Tuesday, Wednesday, but it's very much baked at this point. And this is the September top. We are very close to September 2018 top, and of that area we should start getting a pullback down, targeting that area. As you can see, this is the high probability part of the decline. It can stretch lower, but you just simply cannot make a reliable prediction about that part of the drop. Now let's look at Nasdaq and Twix in order to find additional arguments in favor either of a bullish or bearish count. If we are looking at Nasdaq composite chart, 90-minute chart for the same period from December 18 until April 2019, we could see ABC of 1, ABC of 2, A of 3, B of 3, and here again we have some ambiguity because we know that wave C of 3 has to be subdivided into 5 waves. We can easily get ABC of 1, ABC of 2, A of 3, B of 3, C of 3, 4, ABC of 4. And here it's a question because it could be wave 3 because it's hitting important fips, 285.4 and 76.4 extension of those wave 3 starting from the low of wave 4. So it's a really nice confluence of fips for that wave 3. But another argument could be that was A of 3, B of 3, and now we are topping in C of 3. So again, where could be a more bullish count than this one? It can stretch up to 8,000 up to here, but still we should expect a corrective decline either to this area or even to that area, to the low made on March 8th, 2019. Finally, let's look at Twix. As you may know, I'm a big fan of watching Twix in order to confirm counts of SPY and S&P 500. And again, we are looking at the very same structure, but inverted structure of the top in December 2018. This is when US stock indices found its bottom, and conversely, Twix topped because Twix is an ETN fund which tracks short-term volatility index. So every time US stock market goes down, as a rule of thumb, volatility would spike, and Twix, which holds futures on volatility, short-term volatility, its price would go up as well. So that's why in order to confirm a top in S&P 500, we should get a fully completed downside structure in Twix. And at this moment, I cannot get that fully completed structure. Look at that. ABC of wave 1, corrective wave 2, then we get first leg of wave 3, A of 3, corrective B of 3, and from here we should get a full 5 waves down to consider wave C of 3 completed. Look at that. 1, 2, ABC of 3, ABC of 4, A of 5, B of 5, C of 5. Watch that red count. So we should get the 5th wave in red count to consider that subwave C of wave 3 completed. But again, it would be only wave 3 and we need full 5 waves in the black count to consider the drop of December 2018 top completed. As a result, once the downside structure in volatility is completed, we can argue that S&P 500 and even Nasdaq are ready to start a large correction. But because we are very close to bottom in wave CO3, black labels, we may get a nice corrective move up in volatility and corrective move down in US markets. And here we can expect volatility to go up at least to 36. I mean, tweaks can go up at least to 36. Again, it first would be targeting this area, the previous pullback in wave B of 5, and the major target for that corrective move up would be that point 36.24, which was the top of the preceding wave 4 up of a lower degree, and it can go as high as this point. So invalidation point for that 5 wave down fractal would be that corrective wave B of 3 up. Now I want to show you how you can subscribe to my regular updates of microcharts. For my subscribers, I keep posting 15-minute chart and 45-minute chart of Nasdaq, S&P, ES Mini and Q Mini. To do that, you need just to click register on my website here, and you get the menu. So now I offer you a very low introductory rate. For only $19.99 a month, you get several updates a day, normally at least 3 updates. Lately, I've been updating them more than 3 times a day, and I will also update them over the weekends. If you do that, you then use that part of the site. You just click subscription, and you have different areas for different subscribers. So you click US stock indices, and you get that nice menu. So you see what has been updated, you see the name of the chart, and you see the date and time of the last update. If you have already registered as a free user, you can upgrade your account. You just need to click my account, and here you see upgrade. You click upgrade, and then you will be able to subscribe to one of those packages, either to ES Mini or crude oil and natural gas or value stocks. So if you like this video, I would really ask you to like it and to subscribe to my YouTube channel to make me record more videos. Have a great night and good luck with your trading.